All right, YouTube, Thursday morning, 17th of January, about 6:45 on the eastern side right now in the morning. So just going to go over a few setups and give you guys an idea of what I'm looking at and what I'm focusing on for today. So big picture, major thing that we should be focusing on today is Netflix earnings after the close. Netflix has been super strong as of late, kind of being the driving force behind this recent pop back to the upside in tech. So Netflix earnings could be really crucial. If they have great, blowout earnings, we could easily see Netflix right back over the highs here, heading towards 400. If that happens, it's likely going to pull the rest of the market and the rest of the tech with it. And then we got Amazon reporting earnings in a few weeks as well. Netflix could set the tone for the rest of technology. So their earnings announcement tonight is something that we really need to focus on. Now, I don't suggest ever loading up on calls or loading up on a put or any kind of position before earnings, but there are a few ways to play this, and I'll kind of give you guys my opinion and the things that I'm looking for. So every morning I like to start with the bigger picture view. Take a look at the SPY and the Qs. And one level we've been talking about a lot in the Focus Trades chat is that 260 level for the SPY. So we finally kind of started to trade above that level yesterday. However, it really wasn't a strong, powerful, big volume move. We just barely closed above 260, and we're actually set to open below that level today. So once again, during today's session, 260 is a level to watch on the SPY. Does that become support, and does the market rally heading into Netflix earnings, or do we begin to trade back under 260? But if you blow out the chart, a 195, a daily chart, 260 has been a really important level for the SPY for a while now. So the fact that we broke above there yesterday on really weak price action, really weak volume, leads me to believe that we might not be out of the clear water yet. So keep an eye on that 260 level today for the SPY. Now, in terms of how I personally would aim to play Netflix, I don't want to buy calls on Netflix. I actually don't want to take the Netflix earnings play through taking a position in Netflix. I'd rather put my capital into another tech stock a few weeks out of earnings and let Netflix set the tone for that potential move. So take a look at something like Amazon here. This is a setup that I'm focusing on the most. So two levels of resistance that I'm seeing right now. We've got the bigger picture level up here at 1790, 1800. But what I'm going to look for today is a break above this level right here. So we've got this nice level of resistance. You can call it 1710, 1712, somewhere in that range. And it's been a nice level of resistance for Amazon for a short period of time now. So again, we always want to start with the big picture view. If I'm going to take a long trade in Amazon today, I want to see the Qs and the SPY trade over their levels of resistance with some strength behind them. That way, if I'm putting my money into Amazon, I'm more so riding that group move and not just the individual stock itself moving. So if the market is strong, if the Qs and the SPY can move away from those levels of resistance and continue to trade to the upside, I'm going to be all over this Amazon position. And anytime you're putting on a position before a leading name has earnings, you got to properly risk manage, guys. I'm looking to put $500 to $600 into Amazon calls that will expire after their earnings announcement on the 7th of February, and I'm just going to take the position and forget about it. I'm 100% fine with losing that full $500 or $600. If Netflix has horrible earnings tonight and we're going to gap down tomorrow morning, it's not going to affect me because I've already accepted that risk. That's the only way you can really play earnings, is say, hey, if this goes to zero, I really just don't give a shit. I'll be cool, rather than trying to load up and go for some lotto play. That's what destroys accounts, and that's what ruins, all the forward progress you've been making. So for Amazon, I want to see the SPY and the Qs break above their levels of resistance, and a strong market is a general statement, and I'll look to play Amazon above that level of resistance. And then in terms of a few other setups that we can focus on today, guys, in the Focus Trades chat, we've been focusing a lot on this 4-hour 180 simple moving average setup. And it presented a great opportunity yesterday morning in the financials. This was a setup that we discussed yesterday morning during the private live stream, which you guys should definitely be a part of. and it turned out to be a nice profitable trade. So the game plan we were looking for was for finance, JP Morgan, Goldman, that whole group to show strength on the good earnings report from Goldman. And when we identified XLF closing its prior session right below that 180 simple moving average, we know we were looking for a breakout play. So as I always advise, you don't want to go rushing in the first few ticks above that moving average, but you also don't want to chase the position. You want to get that good balance of a great entry that's going to allow you to either ride the move for an awesome potential gain or have a nice paper cut, not a big deal loss if it comes back to the downside. So on these 4-hour charts, playing this 180 simple moving average, that's always the game plan. We're looking to go long or short on a strong break above or below that level, and then we just use a move as a failure as our exit. So if I'm going long financials here yesterday, I'm taking my position off somewhere down here on a failed breakout. It's going to be a small loss, and because I've already accepted the risk beforehand, it's a painless trade. However, this was good for a 53% return on the options I bought yesterday in about 1.5–2 hours. So this has been a powerful setup for the team as of late, and I think we can continue to watch this for JP Morgan. So we're going to have to see if yesterday's bounce in finance was a 1–2 day event. It could have been a bunch of nothing, all having to do with earnings, or we could start to see some capital begin to flow into that financial sector. If that's the case, I love JP Morgan right now. We are trading just below that 180 simple moving average right here. And for me, it's the one I want to play right now because Goldman is already pretty far gone. Bank of America is already pretty far gone. Wells Fargo could be an opportunity over the next few weeks if we do see that capital return to finance. Morgan Stanley is already pretty far gone. So for me, in terms of financial setups, if capital does continue to run back into financials, I'm going to watch JP Morgan on the 4-hour chart playing that 180 simple moving average. It's the same trade we took in XLF yesterday. It's the same trade that we monitored in Boeing. Same setup we saw here in CMG, in Lulu, in Amazon, in Facebook, and so on and so on. It's a great, low-risk, potentially high-reward setup that myself and a lot of other traders in the chat room have been trading with a lot of success lately. So that's what I'm going to focus on today, guys. Those major levels of resistance for the SPY and the Qs. Do we move above or below those levels? And can Amazon get that breakout aligned with a bigger picture move across the board? I don't want to trade a breakout on Amazon if Amazon's the only thing showing signs of strength. My best trades, my best returns, I trade the most consistently when I align my moves with the bigger picture. Regardless of which stock I'm trading, I want to time a move in that stock with the bigger picture. When I take a breakout trade in Amazon, I want to see the SPY, the Qs, XLK, Google, Netflix, Nvidia, Apple, Facebook. I want to see them all trading to the upside. Those are the best moves. That's when the wind is at your back. That puts you in the best position to get that great, awesome return. So that's my focus today, guys. Going to watch JPM on the 4-hour chart and pay attention to the Qs, SPY, and Amazon and how they react at those levels of resistance heading into Netflix earnings. And then I'll update you guys tomorrow morning on any potential trades that I took.